Hello and welcome to this, our second edition of State of the Markets, where we gain insight from senior leaders across LCH and LSEG. I'm your host, John Cronin, and I'm delighted to be joined in LSEG's London studio by two leading figures from the business. Rohit Verma is Group Head of Asia Pacific for Post-Trade, LSEG Markets, and James Pearson is Head of FX for LSEG Markets. Gentlemen, welcome to you both. It's great to have you.
Thank you very much.
Well, thank you for your time. Now we're going to take a bit of time talking about the global perspective in this edition of State of the Markets and understanding more about the business and where you see it going. Before we do that, it would be great just to understand a little bit more about your roles, your focus and what's driving you. So Rohit, let me come to you first.
Thank you, John. First of all, it's a pleasure to be here. I'm based in Singapore. I run the post-trade business in Asia Pacific, and by that we mean clearing and optimization solutions that basically help our stakeholders manage the scarce financial resources, margin, capital, risk, and so forth in a much better fashion. And we want to bring the Asian community to the best-in-class standards that their global peers follow.
Okay, so it's a big patch that you're covering.
It certainly is, and it's very fragmented, and bringing a uniformity standard that makes them more competitive is a journey, but it's certainly very broad and fragmented.
Okay, well, let's talk about that journey as we get into the conversation. James, and for you,
Yes.
the FX focus, but beyond that as well.
So I've been at LSEG for 4 years. I initially ran Forex Clear, which is the FX clearinghouse part of LCH, and then a year ago I was asked to run FX in markets, which is really the trading venues. So it's FX all, it's matching, and it's price stream.
So again, a big patch that you're covering.
It's a very global business that's across the world. We're in over the majority of the world's countries, either our customers or ourselves. We have people in many countries and service many currencies. So very global.
Well, let's explore that as well. And let's get into some of the detail now as well. James, from your perspective, looking at global markets, what's your assessment of how things currently stand? Where do you see the major challenges and, of course, the major opportunities?
Global markets are one of the most interesting junctures, I think, in my career, which is too long. What I mean by that really is that we've had a huge upheaval, I guess, in the world order of economics and politics in the past sort of 5 years. The post-Lehman world, I was at Lehman when it went down, so I had a front row seat to that crisis.
It was a busy time.
A very busy time, but in that post-Lehman world, we saw interest rates, global interest rates reduced to almost zero across the world. And we got used to a very new normal. With COVID coming in 2020, followed by, I guess, Ukraine and Israel, we've had some sort of shocks in the world which have really changed the dynamics of the economics of the world. So from that I mean we've had interest rates go up in reaction to inflation spiking, and now we're at a juncture in economics where I think it's, for the first time in a long time, there's a real debate over how low interest rates go, what's the payoff between the natural rate of unemployment and inflation. So there's some now uncertainty in economics that's been introduced to the market, which previously it was fairly sort of static. So for me this is a return to a macro environment from previously, pre-08 really. That's had knock-on effects into politics. We've seen some division of politics. I think social media's probably also act as echo chambers and divided that even further. So you've got a very fragile political world and a very uncertain economic world. But I guess the good news is that in the past 15 years post-Lehman, the regulators, the central banks, the banks themselves, and the whole structure have become more resilient. So regulation's been unfolded. Institutions such as LCH have sprung up and basically made the world a safer place, a more resilient place. So markets are in, I think, very healthy, very vibrant, in a very good state, albeit against a backdrop of probably uncertain economics and fragile politics.
Like you say, a more resilient financial world, sitting in perhaps a less and a more uncertain political world.
Yeah, absolutely.
Well.
Yeah.
Okay, and how does that affect the work that you're doing in FX?
So FX is a true barometer of, if you like, global trade, investments, capital flows, and really sort of global capitalism, if I'm quite frank. So from that point of view, FX is very healthy as well. So we're turning over, I mean, the FX market is turnover of around 10 trillion a day, which is a huge number. It's, it's a third of the US GDP in 1 year. So it's a massive number every single day. What that means is that we've got certain areas growing faster than others. So Asia is probably our fastest growing area. I think CNH has been the fastest growing currency in the past 5-10 years. But there are obviously pockets of also growth everywhere else. So FX is in rude health. It's a very fragmented and proliferated market. You have flows coming in from asset managers, from hedge funds, from corporates, from all different areas in the world. And you have all different products as well. So it's albeit a quite simple product in itself, FX. It's quite a complex architecture and quite a complex ecosystem. So it's that fragmentation is quite difficult to bring together. So the challenge really is bringing a $10 trillion a day market that's huge, that's quite fragmented, into a sort of a unified place. And that's where I think where LSEG comes in to sort of bring that together.
Okay, and Rohit, let me come to you. James talks there about the opportunity, particularly in Asia Pac. Moving this beyond FX to the wider markets, and you're focused on Asia Pacific, how would you define the circumstances currently in Asia from a business perspective?
Certainly. And before I get into Asia, the thing that connects the macro environment that James described in a very articulate manner is uncertainty. We are also operating in Asia in that macro backdrop. Uncertainty is driving a lot of changes. However, the first and the most important characteristic of Asia for me is ambition. About 37% of the global GDP comes from Asia Pacific today. 60% of the global youth physically reside in that part of the world. And that tells us that in the next 15 years, Asia Pacific is projected to contribute 42%. And that's because of the demographics and the groundwork being done right now by all of us, by the governments, by the policymakers. With that outlook, we have a journey there. And we have to be aware that the other characteristic of Asia, as we discussed briefly before, is fragmentation. One Asia strategy is a myth. It's not just one country. So being aware of the nuances of what the different countries are trying to do to balance growth ambition with their socio-economic goals is very important. And therefore, we need to be aware of the interconnectedness between the regulatory and the governance out there. And Asia basically is not peripheral anymore. If we look at the AI patents that have been registered in the last couple of years, more than 3/4 have been from Asia. And that's just Asia expressing its ambition. The next phase of Asia Pacific is not going to be a slow growth. They are trying to fast track to come at par with their global peers. And that's the journey we are going to partner with them. And patience is key, understanding our very diverse group of stakeholders, and staying committed, staying present is very important in that part.
But let me put this to you, Rohit. When you talk about Asia, do you really simply mean China and India?
Those two are very important and large economies, as James would agree, from various asset classes. However, I'm not talking about only those two. There are other economies that are growing very fast, that are equally ambitious, similar demographics, similar GDP strength, and so forth. South Korea, Taiwan, Malaysia, Indonesia, Thailand, they're all such examples that present a very healthy growth proposition in the midterm. Secondly, there are developed markets like Australia, Japan, Singapore, Hong Kong, somewhere in terms of being major financial centers. And that balance gives us the holistic landscape, which has China and India, very material, but there are other parts that are equally interesting and sometimes could be easier to access because education is key. And when you are starting small, sometimes you prove your credibility amongst a finite set of stakeholders, it could be a little easier.
Yeah, if you translate into FX terms, I guess from a deliverable perspective, in deliverable FX, apart from the dollar and the euro, the two biggest currencies are the Japanese yen and the Chinese CNH. So again, that's where we shouldn't forget Japan in all this. It's a huge economy over in Asia. Equally on the non-deliverable side, so the derivative NDF side of FX, the biggest currencies are India, Korea, and Taiwan. So again, you've got a slight difference there in there. So there are large economies playing different roles across Asia, certainly within the FX world.
So within FX, there's, as you say, a huge opportunity then, in particular, in the area that Rohit's covering in Asia in particular.
It's the fastest growing region, if you like, for our business at the moment. And I think if I had to be I guess CNH has been the fastest growing currency globally. In our business, India's probably been our fastest growing market. So yeah.
And do you see that continuing into the near future as well, that trajectory?
There's no reason to suggest it's not. I think that's fair. I think it's the good thing about Asia, as Rohit has said, is there's so many different countries. As one slows down, you often get some growth elsewhere. So they're not uniform in its growth patterns, but there's different central bank and regulatory and governmental views around the liberalisation as well as the Asian currencies. So you're seeing some moves towards liberalisation across certain countries, which again opens up to global investors, which again should be another spark to growth. So yeah.
If I may add to this point about is this trajectory going to continue, I have no doubt that it's going to continue or maybe steepen further. And just two data sets there. Contribution in real economy, about 40%. Contribution in our LSEG, very global market infrastructure and data business, about 15%. It has grown from a smaller number, impressive, but the gap between that 40 and 15 is the size of the opportunity. With the intent we see on the ground by the Asian policymakers, central banks, there definitely is a very strong intent to grow and to grow faster. And that's where we facilitate bridging of the gap between real economy and participation in the global derivatives market.
And again, every country's at a different stage of that liberalisation as well. Since the 98 Asian crisis, every country's had different reactions, and now we're seeing a gradual internationalisation, if you like, of those markets, and that again should add that extra fillip or that extra boost or accelerate the catalyst of the growth.
But there's a clear sort of story of complexity of, as you say, Rohit, fragmentation here when it comes to Asia in particular. Just sticking with the region, where do you see it now then? We've sort of painted a picture of how it's got there and what those opportunities are, but what do you see as the story now?
Sure. I think Asia, and as far as the financial institutions space is concerned, it's still maturing. We are past the compliance phase. So in our world, a couple of major regulations that have impacted the markets are mandatory clearing in the aftermath of financial crisis. And that's a mature theme. People who need to clear are already clearing. Secondly, uncleared margin rules have been implemented. It's at the last stage where some of the Asian economies, China, Korea, India, are in the process of implementing as we speak. So we are moving past the compliance phase. Now the P&L owners, the business owners, the risk takers, they are thinking about efficiency. Are we competitive enough in terms of our transaction cost? Because now they are looking beyond. They are being proactive. They want to compete with their global peers and are looking at the footprint in terms of capital, in terms of margin, return on assets, and so forth. And that's where our partnership becomes a lot more relevant. We are in a world where the banks want to do more. They want to compete at a global scale. And with our solutions across the LSEG franchise, but specifically around execution and clearing and post-trade risk and capital management, we can give them the tools to be more competitive. So far we have seen banks are accessing us, but not quite the way their global peers are. They are indirect. They have a weaker say in the way we design our products. And that's changing. In the last 4 or 5 years, we have committed strongly to the region. We are seeing a trend of banks becoming direct members. They are telling us what they want us to build, and they are being the early adopters of those solutions. So that fills us with a lot of confidence.
And that's what you want. You want those conversations. You want the banks to come to you and say, this is what we need.
We want the barriers to be down. They can tell us what problems are impacting them. And if we solve those problems, that's the feedback loop. That's a very virtuous cycle that we're trying to create.
That's a really important part about the commercialism, which what we need to understand. And you only understand a client's pain points or where they're trying to extract value by the conversation, by the relationship, by the trust, by the network, and having that dialogue loop. So I think understanding when banks come to say, this particular angle is causing me problems and my return on capital is diminishing, how can you help? That's when we can offer a variety of solutions. And I think the world where we need to connect efficiencies better through the trade life cycle for our customers, whereby as they do their trade, they then need to work out what they do with that risk, in terms of how they settle it, how they confirm it, and also ultimately how they optimize that risk. So that's when we can link from my business in the execution venue side through to perhaps a post-trade solution side or a clearing side, whereby we can offer that end-to-end service. And that's really understanding the pain points is where we can help the customer.
Understanding those pain points, understanding what customers need, a clear message from you both as well. Where does LSEG FX fit into all of this, James?
Sure. So LSEG FX is a very established partner of the market. We've been providing trading platforms for many decades. And I think the future really for us is establishing ourselves across the world. So we are global as it is already. We are very strong in Asia, but we are established, as I said, throughout the world. So we need to make sure we retain that global presence, because we have customers who are global banks who might be present in numerous centres. We have local banks who might be present in just one centre. Equally, we have asset managers, hedge funds, corporate clients who are, again, some are very regional, localised, some are very global. So we need to make sure that we are there for them where they are there themselves. So we need to be present where they're located. And also provide the breadth of product that they desire. So we have a globality, we have a breadth of product, we have the network existing, so we've brought people together. So we have over 200 liquidity providers and banks already on our platforms. That is the liquidity that clients seek. By bringing that together, that means that we are hyper relevant, and it's that relevance that we need to maintain. And that relevance you maintain by understanding exactly what the customers want and adapting with them and changing with them.
Just to pick up on a point that you raised there, I mean, when you look at what you're doing, when you look at LSEG FX, do you see it as a global business or a series of regional business or a bit of both?
It's a bit of both, because we are fundamentally a global business. So we service our clients globally. We pass through the regions, which is how a lot of our clients manage their risk as well. Having said that, as I said, there are some very particular nuances in certain currencies or certain client segments, or indeed in certain countries that demand a particular level of service or indeed product. So we have to be global as our starting point, but we do have very particular, I guess, regional or product specific or client segment specific nuances that we do then adapt. So, but we are fundamentally a global business.
And Rohit, from an LCH Asia perspective, what are your thoughts on what James has said there?
Well, one thing that I wanted to add to James's topic, and that's what we see in Asia, that even in order to be global, Asia in particular, and there are other parts of the world that demand similar, it requires you to localize fairly strongly. Capital account convertibility or currency restrictions are quite commonplace in many of these growing economies, and therefore there exists an onshore pool of liquidity and an offshore pool of liquidity. And for us, LSEG as a global institution, we need to be relevant in both. In an ideal world, we want the participation to be homogeneous in both. However, the local pool generally is a bit more local banks dominated, local players dominated, and the offshore pool is a lot more international. Us being that bridge is a very important value proposition, is the unique strength that we bring to the marketplace there. Coming to where do I see Asia going from here? Asia as such is transitioning from being more lending oriented to a bit more capital markets oriented in terms of raising capital rather than raise capital in the markets, then exchange and trading that comes with the capital exchange. And we facilitate that. Where we are right now, Asia, we talked about previously, is a large part of the underlying assets, nearly 40%. But the usage of derivatives is also at a nascent stage. In Asia, it's about 1% of the notional underlying securities.
People might be quite surprised by that, Rohit, that it's that level, that small.
That's indeed a small number. To give you a comparison, in the developed parts of the world, it's 6 times. So as the underlying securities pie grow, the percentage, the sophistication of usage of derivatives for risk management, price discovery, hedging is all going to increase as well. So it's almost going to fast track the use of derivatives and Asian participation in the global marketplace. And where does it belong? 1/3 sounds about right, and we expect our current position from the Asian banks to double over the next medium term, if I may. The banks want to do more. The banks are done with compliance. They want to compete with their global peers. They understand the importance of transaction cost base. And that's why they are now looking at not just the bid ask, but also the cost of funding or the capital footprint the derivatives or the instrument brings along with it. The governments want to issue more debt in the international market. They want international asset owners, pension funds, to buy more and more of their assets. And at LSEG, our franchise offers various solutions that make these two ambitions possible, from index, from data, and once you progress to the execution, clearing, and the post-trade risk management stuff, we are present, we can add value at various stages, and that's where we are a credible partner to bring the Asian market players to a place that is aligned to their growth aspirations.
An example of that progress, I think you can see in our business ForexClear. For the first time now we have Asian regional banks joining as members of ForexClear, which historically has been a preserve really of the global banks, if you like, investment banks. So that again is the evolution of that market and how the Asian banks now I think are certainly wanting to compete on a commercial basis, which is what Rohit's alluding to.
Okay, gentlemen. Final thoughts. We've looked at the opportunities for businesses, for clients, and we've discussed how LCH, how LSEG sees its role in the future. But how are we going to get there? I guess that's the crunch question, the question that will be on many people's lips. It sounds great opportunity, but how do we get there? What needs to be done to achieve the goals that you've been setting out? Now, Rohit, you're going to be taking on the role of Global Head of Sales Post-Trade as well. Congratulations on that.
Thank you.
I'm going to ask you with your Asia Pacific head on, but your Global Head of Sales head on as well. How do you achieve those goals, the opportunities that you've been setting out?
Well, execution is the most important part. We can have a very ambitious plan, we can have the right people, but till it's executed, it's not done. And I believe there are elements of what we are doing in Asia can be replicated in my next global remit, that because it has worked there. The first and most important thing is relationships. We are a complex business. It's nuanced, if I may. It's not too technical, but it's about making our stakeholders understand the impact on cost of funding, the impact on return on capital. So relationships with the right decision makers is very important. And it's a relationship where we are not going to be giving them promotional pricing. It's about education. That's more effective than coming up with a scheme that gives you some discount and so forth. So it's a long-term relationship with the right people, having a structured approach to bring value to their businesses. And one of the most important things that allows you to get in the right circle is listening, because we have to build credibility by solving real problems. And that's a key part of our role. We are ears to the ground, whichever part of the world we are in. Markets tell us, they want to tell us, if they trust us enough, what are the problems they are prioritizing. And if we can prove our sincerity by solving those problems, that helps us retain that seat. Within our LSEG franchise, within the LCH business, we have delivered a few changes that are very relevant to the Asia Pacific marketplace. We have extended our service to 24/5, and that allows better risk management. There is nothing commercial about it. We have allowed new instruments like Malaysian Ringgit and NDIRS clearing. We have recently announced what James was mentioning. We understand CNH is very important for our market partners. And therefore, we are going to bring similar efficiency to the players who are using that instrument, be it options, swaps, or forwards, in the next year. We have also made several regional collateral type eligible, and that's very important. Asian markets fund a lot in cash. It doesn't work anymore in a high interest rate environment. So giving them more efficient solutions that help them minimize or manage their financial resources better gives us credibility. Now, to sum it up, the governments want to be a bigger destination for capital allocation. The banks, the financial institutions want to play a bigger role in the derivatives marketplace to capture a larger share of the bid-ask wallet in the derivatives space. We have the proposition across various businesses that we manage to be their partner, and we have to be that trusted advisor along this journey and truly demonstrate that we will indeed make more possible.
Okay, Rohit, thank you. And James, let me come to you finally. Your thoughts on what Rohit said there and what the opportunity is, how we're going to get there.
So I completely agree and echo everything Rohit said, but I guess simplistically the way I look at it is we need to be the market's partner. It's that simple. So what I mean by that is that we need to be there for them throughout this economic uncertainty, throughout the political fragility we talked about earlier, and really be there through all weather conditions for them so that whatever direction the markets take, we are there with them. So that means consistency, it means reliability, it means we have to be resilient for them. It means we have to work with them through change. So that's just not only in the product innovation, but also in the product development, the product launch, the full product life cycle. We have to work with our customers to ensure that what we're delivering is value for them. Value for them might be cost cutting, it may be revenue enhancement. It's always one of those two things. So from that point of view, the dialogue and the feedback loop that Rohit talks about is exactly what we need to maintain. And with that, we can navigate through the very uncertain markets with our customers.
Uncertain markets, but like you say, one where you remain resilient.
Absolutely, yeah. If we're not resilient, that's our license to operate. So yeah, absolutely.
Okay, well, gentlemen, thank you both very much indeed. It's been a fascinating conversation, some fascinating insights. But James, Rohit, thank you very much indeed for your time.
Thank you very much indeed.
And don't forget, you can find out more about LCH by going to our website and social platforms. You can see the details on the screen now. Thanks for watching, and we look forward to seeing you on our next LCH update.